Chair Waters didn't mention Robinhood by name when she announced these hearings that we think we'll get. No date either. But is the hearing about Robinhood, or is it something larger, do you think?
Well, I think it'll get larger than just this one GameStop situation with Robinhood. A decision will be made as to whether those hearings are at the full committee level or before the Capital Markets Subcommittee that I chair. And I think we have to look not just on how the markets affect the participants, but how they affect the entire economy. I'm not a fan of day trading. I'm not a fan of short selling. What we want to see our capital markets do is to provide capital for businesses that are actually functioning out there in the economy. All this talk about GameStop, and the company hasn't received any of this money. It's not building any new stores. I don't think the capital market should be a casino. If they are, to the extent they are, we got to make sure it's a fair casino. But what I'd much rather do is go back to a period of time when the average stock was held for 4 years rather than just for 6 months.
So that's interesting. When we start to talk about required duration of holdings, I mean, you're getting into an interesting area there. I mean, Senator Toomey notwithstanding, we did see. Go ahead.
I'm not proposing some law that says you buy a stock, you have to hold it for a year. But we ought to have financial education in our high schools and colleges so that people realize that the purpose of investing in a stock is because you believe it'll go up over the long term, not because you believe that you're going to beat the market by 6 seconds or 6 minutes.
Well, Congressman, the horse may have left the barn on that one. I mean, advances in technology make it so that just by picking up your phone, you can trade stocks, sell, buy within seconds. It's unclear that's going to change.
Yeah, that doesn't mean you should.
Yeah.
Technology allows you to drive a car over a cliff.
Yeah, right.
I had driver's education. They told me not to do that.
No, and you're right. There is a lot of education. It's frankly what we try to do here, although many would attack us for actually doing that. It's been a fascinating week to watch. I wonder when you talk about short selling as well, I would point out, and it's hard to defend in certain areas, but there are short sellers also who've uncovered frauds in the market through the years. When I used to do more reporting on that, working with some of them, they were excellent policemen for the market. So, I mean, every regulation has brings something else that unexpected. I just wonder how much you think really can be done here when there's a full understanding of what's occurred.
Well, in the UK and in Europe, there's disclosure whenever you have a short position of over 0.5% of the stock outstanding. We ought to take a look at adopting that. It hasn't destroyed the stock markets of the UK and the EU.
Congressman, in general, should it be allowed to be able to short companies at more than 100%? Is that sort of the key area that a lawmaker like yourself might be honing in on?
Certainly no one short seller should be shorting over 100%. In this case, it's hard to say who went over 100% because you had a whole group of people who may or may not have been connected. And at the other side, you had those in the Reddit group who were bidding the stock price up. The stock price should reflect the real value of the company, not some tug of war between guys on Reddit and guys in the C Street suites on Wall Street. We've got to get back to a situation where we have long-term investment based on the value of the company, not momentum investing based on the idea that the company may not be worth anything or the Bitcoin may not be worth anything, but I can sell it to a bigger fool and get out of it and make a profit.
Shepard Smith here. Thanks for watching CNBC on YouTube.